On Friday, we saw Bitcoin return to $52,000. And if you've been watching this channel for a while, then you will know this is the area that I signaled to you to have a look for a potential bounce and the worst to be over. In today's video, I'm going to go through whether or not I think we're actually going to get that bounce and why this week's Asia Open is the most critical open of all. If you are new here, welcome. If you are returning, welcome back. Be sure to smash that like button nice and early. I'm Annie and this is 𝗟𝗶𝗿𝗃𝗃. Now let's get into it. Now starting with Bitcoin on the daily time frame, you can see here that this was the liquidation zone that I've been talking about probably for more than a month now on this channel. And you can see that this red candle right here wicked exactly to the bottom of that zone. Now this zone has not been touched since my last videos. You can go back to any of my last videos over the last month and you'll see that this is the zone that was marked and we have wicked exactly to the bottom of it. This just goes to show how studying liquidity and knowing where open positions liquidation levels are in their highest amount is the most accurate form of trading you can get. So let's talk about what happens once price does actually wipe out a high level of liquidity. First of all, you can't use liquidity alone as a trading strategy because there's always going to be liquidity above price, as there is up here, and there's always going to be liquidity below price because after every strong move, whether the strong move is to the downside or to the upside, new positions get opened. And every time a new position is opened, that means new liquidation levels get printed. So you need to combine data like this with an actual trading strategy. And over here, we use the TBD system, which partly comes from the market maker method, which is a very in-depth for its trading strategy. So when we're having a look at the liquidation that has been wiped out now, I just want to talk about what you look for after a zone has been wiped out to get an idea that we're not going to return there, or we're not going to return there anytime soon, I should say. And I want you to have a look at this price action as opposed to this one here, because when this candle made its move down to 49,000, there was a lot of liquidity there as well, which got wiped out. And what we saw following that was a very large wick, and then for quite some time we did not return to that level, and that was a signal to us that the damage for that period of time was done. That was all they really needed to collect. They wiped out enough people and they're ready to move price up for some time. So every time a high zone like this gets wiped out, you need to wait. It's not a time to catch falling knives. You need to wait on the relative time frame for a couple of candles following to make sure that price is going to move out and away and start to change the market structure, because the initial candle that follows is always going to be a move in the opposite direction because it's the liquidations getting filled. And what is a liquidation? It is an order in the opposite direction. So what we need to analyze is what happens following the candle that wipes out the liquidity. And unfortunately, in this particular situation, the liquidity was wiped out on a Friday, and so the following two daily candles are going to be weekend candles, and we don't really trust weekend candles because weekend is just retail. So when we see the price starting to move up here, a lot of people are currently buying the dip, but then you have to ask yourself, who are those people? Because we're not buying dips in volume. These candles are tiny, which brings us to the assumption that it's retail currently buying the dip over the weekend, and that in itself could present another problem. At the same time, you would look at this and say, well, this could be a W formation then, right? Because that's what I told you I was looking for. And yeah, it could. So how do you play that then? Well, either you are part of the weekend traders right now who have opened a long position and you have your stop loss, under probably this candle, and you're hoping that the final damage is done and we're going to move out and up from there, and maybe that will work in your favor and maybe it will be all fine. At the end of the day, nothing in trading is a guarantee. It's all a game of probability versus possibility. Is it possible that price shifts out to the upside and starts to come for the higher liquidation levels next? Yeah, absolutely, that's possible. Is it possible also that we open on Monday with another rejection of any of these EMAs and come down for the lower liquidation level? Also possible. And this is why making your decision on a weekend, it can be risky, but it also can play out. So that's trading. You just have to decide whether or not you want to take the chance on that. So it is possible at this point in time that the damage is done and we start to shift out from here. It's absolutely possible. But there is a big caution about this week that is much more important than what the current daily time frame is showing us for Bitcoin. And that comes down to something that I noticed happening during the week that I realized was very, very similar to what was happening at the beginning of August. And this is in relation to the Japan carry trade, when we saw around August 5th, Bitcoin took a big drop down to that 49K and the whole market pretty much dumped. And then we had a short-term recovery. There was a pattern that formed with the price action back then that started to happen again this week that just passed. And it's making me believe that this week's Asia Open is going to be the most critical session to watch. So I'm going to take you through that now. Towards the end of July this year, Japan announced that they were increasing their interest rates, which caused the yen to strengthen and the dollar declined. By now, you've probably heard about the Japan carry trade. It was all over the media at the time, and the traders that were trading that strategy were severely affected by this announcement, and it caused them to start to unwind their positions. And as that started to happen, we saw this massive deleveraging event and all these margin calls started to happen. That caused the stock market to come down. We saw the S&P here. This was the big drop through that news happening there. And then we also saw the same thing on the NASDAQ, and the Nikkei index recorded the biggest decline since 1987. And this also affected Bitcoin. We saw a massive drop from about 69 to 49. It's about a 30% drop. And this was all happening because it forced investors to move towards risk off. Following that, the BOJ then came out and said that they would not hike interest rates whilst the market was so unstable. And we saw a little bit of a recovery happen on all of these things. But the thing is, that announcement didn't actually remove the risk completely, because they didn't say that they were not raising rates indefinitely. They just said whilst the market is unstable, which left them open to be able to do that at another time should they need to. Now, whilst this deleveraging was happening, as a day trader who trades the session times, I trade Asia, UK, US, I started to notice that the pattern behaviors that are usual for these sessions started to change. And that's where I realized that as a trader, I have to back off a bit until I understand what is going on. But I noticed a very particular pattern that seemed to be forming a new pattern that was forming around that time. And the reason I'm bringing it up now is because in the last week that we just had, I noticed it return again. And that's what made me realize I need to step back, study, and have a think about what is really going on. Because usually when you have a big deleveraging event like that, it's not usually a one-time thing. You usually will come back a bit later and have a second hit. And that's when I realized that the BOJ is set to make a rate decision in September again. And considering I'm seeing this very particular pattern, it's making me actually wonder if the leftover carry trades are now starting to close out. And that is why I tell you that this week's Asia Open is very, very critical, especially if the weekend price action is creeping up. Even if it's just a slow trend up, that's fine. But we have to be very careful if we're opening long positions, that before Asia opens, and I would even say before the dead gap zone opens this week, which opens at 5 p.m. New York, that if you were in long positions that you were hoping were your buy the dip moments and we're going beyond 70K from here, at the very least, move your stop losses to your entry at the very least, if they're trades that you want to hold on to, because there is a big chance that Asia could flip the price action around this week. And I'm going to go to the charts to show you why. So I've marked out a few examples here. Now, what I'm showing you are not necessarily tradable examples. I mean, it could probably get you in quite a bit of trouble if you even tried to trade what I'm about to show you, unless you really, really understood pivots and scalping very, very well. Otherwise, it's just a learning experience and something to understand that's happening right now. This was where it first started, and this was on the 29th of July, which I believe was just before the announcement, or might have been on the day, I can't remember exactly, but this is exactly what I'm talking about. This here is the Asia session, and initially leading up into that announcement, Asia ran a trend to the upside, which is not Asia's typical behavior. That following day, the US took it right back. And this was where this behavior began. It didn't happen every day, which is why I say it's not tradable. But on the days that Asia made a big move, US took it back, or vice versa. I'm going to show you another example here. Now, this was the end of the move when Bitcoin hit 49,000. And you can see here that Asia opened up with a very big move to the downside. And then US opened and took most of that back. It was almost like the Asia market maker and US were just playing tag team, and UK in the middle was like, please sir, can I have some profits? Because UK wasn't doing anything. Here we can see US ran the trend down and Asia opened and took it back. And this kind of happened multiple times throughout August. Here we can see a few more in this week. This one actually started in the dead gap zone. So we ran a big move to the downside. US took it back. Here, Asia took it up. US took it back. And these were all happening sessions back to back in the same day. So as a scalper, great. If you can get your entry, if the entries meet your conditions, there are trades there. But as a trend trader, especially on higher timeframes, this would have been impossible. Like, you would have been wiped out most of the time. And this would be extremely frustrating for high timeframe traders, not knowing if the trend was up or down. Every day we just ended up back in the same spot. And now we come to the week that has just finished. And this is why I'm pointing it out to you. See how now that you know it exists, you can see that that behavior started again. Asia to the downside, US did the recovery. Asia to the downside, US to the recovery. This time US to the downside, Asia did the recovery. So this is one reason why I think we might be in a situation where the rest of the carry trades are currently offloading. And the other thing too is the yen has reached the same level that it reached in August 5th when this started. So August 5th, when the yen peaked right here, was this August 5th right here when Bitcoin hit $49,000. And now the yen closed this week, hitting that level again. Now, if you're part of our private community at 𝗟𝗶𝗃𝗍, you will know that we have an economist as part of our team, Jared, and he said here that this could trigger another round of global deleveraging when Asia opens on Monday. So I don't want to scare you with that. At the end of the day, on this channel, we trade price action. So the point of this video is to just caution you that if you did open long positions over the weekend, or you're thinking of opening long positions, stay in them. You never know. You might get lucky and we might have a big move to the upside this week, but it's not going to hurt you to move your stop losses and protect those trades that you've taken over the weekend, because as we can see here, we've had this bounce from 52K where we closed in US. We've had a little bit of, this is essentially just a weekend trap, but people see this as a move to the upside and are probably longing and buying dips and whatnot. So if you see it that way, that's fine. But wherever you have entered here, I would 100% protect that trade. If you think you've caught the bottom, it won't hurt you to protect that trade, because if you're wrong and your stop loss is at least at entry, you're going to get stopped out for no loss. At most, you lose the fees, and you can handle that. But if you don't have a stop loss in place right now and Asia opens up and it is bad, everything you've done over the weekend could be massively wiped out. And if Asia ends up doing what Asia's supposed to do, which is consolidate in an under 2% range, then we're good. We're good, and we trade price action for what it is. But is it worth taking that risk before we know that? Not in my opinion. So far, the weekend trap is this price action right here. And if you don't know what the weekend trap is, it's essentially the consolidation that traders get stuck in, where we tend to have very low volume because the market makers aren't around. Price doesn't really go anywhere. It basically just goes sideways. And the point of that is to keep you in your open positions so that when the market does open on Monday, the market makers can liquidate one side, whether it be the longs or the shorts. There will be someone that they're coming for. And usually the trap gets set on Friday in one of the sessions. We can see here that it would have been set to the shorts. With this very big move down, there would have to have been people who opened shorts at the very worst moment. Otherwise, the candle wouldn't exist. And after opening those shorts, we've closed up into this range here. And that is exactly what the trap is. So if we didn't have this that has been happening lately, what we would usually expect is that price will continue to the upside because it's going to want to keep these traders trapped. But this week is a little bit different, and I just want you to be very cautious about that. When we have a look at the heat maps, we're looking at the limit orders that are currently waiting in the books. If we can see super large limit orders above and below price, it lets us know where the large players are hoping to long or short Bitcoin. When I have a look at this, we don't have anything above price, which is a good sign, because if there were large orders above price, then we would expect that the price will move up into that level, pick up those orders, and we would see a rejection. It's not there yet. However, it is Sunday, and so it can show up at any time. Watching these sorts of heat maps, you need to be able to do that live because these are limit orders and they can change at any time. We do still have significant orders below price. So that means we have people thinking that there is a bigger dip to come and they are interested in buying that dip. We have significant orders at 51,650, and we still have the large pocket of significant orders between 47,000 to 47,500. What that means is that if Asia does open and it does take back all of the weekend gains, you'll be looking initially around the 51,650 sort of area for potential support. Actually, before that, you would look for the most recent low. And then if we broke the most recent low, you'd look at 51,650. And then only if we broke through that, or we didn't get a strong bounce out of it, or some sort of reversal pattern, that's when you would start looking to around the 47K kind of region. So I don't want to worry you and make you think we're going to 47K now. I'm just noting that they're there, but there are conditions that would have to be met along the way before we have any chance of going there. Having a look at the heat map, this green area here was the liquidity that got wiped out when we came down to 52K. And so that means we need to reset and see what new liquidity is below price. And the biggest pocket is sitting down here between about 49,000 to about 47.5. So when we have large liquidity here, these are the open positions liquidation levels. When the price region of this high level of liquidity lines up with orders as well, that adds confluence to that level. So we do have quite a bit of liquidity at 47, and we do have quite a bit of long orders at 47. That doesn't mean we'll get there this week. It might be an eventual thing. So here's how I plan to play this week. I did open a small long position. That's nowhere near the size that I would normally open for a normal trade. For me, it was about 1/4 the size. So I'm just playing just to be in it. And I opened that when we had this move down here on Friday. I will be moving my stop loss to my entry before the market opens. So everything I've told you to do, I will be doing. If the price does continue to move up as the week opens, I'll be watching the price as it attempts any of these EMAs, or each of these EMAs as it gets there. Right now, the price is under the daily time frame 10 EMA. That's extremely bearish. So if this move is to continue, it's got to at the very least get back above that. That doesn't mean the battle's over from there, because then it has to get back above the 20 and then eventually back above the 50. So I would literally just be watching that if the price does continue to trend up. I do still currently have my short open. My short was opened here on the 6th of June, and I'm still in that position, and I won't be closing that short really I don't think for a long time, to be honest with you, because I do think that there's more bad side to come for September. Even if this leads to a bounce, I don't think it's the bounce that breaks 70K. I'm sorry to tell you. But of course, if I change my mind on that and I do close this short, I will for sure let you know. But we're not talking about this short. We're talking about the long that was just opened. So if Asia opens and brings price back down, I will get stopped out of that long position, but I will be stopped out at no loss because I have effectively managed my trade and moved my stop loss to break even. If it continues up, I'll be looking to the EMA to see how price reacts there. And once it makes its way to each of these EMAs, when I say I'll be watching to see if there's weakness for further downside, I will watch them on lower time frames, 15-minute, 1 hour kind of time frame, because if any of that happens, considering the price is currently underneath all of the EMAs, there is a very good chance that any short-term move up here is only going to lead to a lower high before we head down to a lower level. Now, the lower level could come back to these candle closes here around 52, 53. It could come back to the round number 50,000, or it could get really dramatic and come down into the 47. I'm hoping for 47 more towards the end of September, maybe after we have the interest rate announcement. That's when I would like to see Bitcoin hit 47, because I think that's going to be the most significant news event of September. Now, just quickly, before I move on, I just wanted to let you know that we have an exclusive competition starting tomorrow. It is Trade, Travel, Chill in combination with Blofin, and you can earn up to $10,000 worth of rewards for your ROI and trading volume. If you want to join this competition, there is a link in the description of this video. So you'll need to first get your Blofin account using that link. That link gets you 20% trading fee rebate for life. It will also allow you to be part of this competition. And the other thing too is, once you have used that link to join up, you'll then see in the description of any of my videos, there is a step here to join the free section of our Discord. So if you follow those instructions after you've created your Blofin account, then for the duration of the comp, it will actually get you access to my Pro Traders team's trade alerts. Here's an example of what our trade alerts actually look like. You get the entry, the stop loss, and the multiple take profits. And you also get updated along the way when our traders take partial profit or close a position or however they manage the position. And those updates follow you through the entire trade until our traders take their final profit. So if you want access to these trade alerts during the competition, be sure to join Blofin first using the link in the description of the video. Then under here where it says option 1, follow those instructions to get into our Discord. And when the competition opens tomorrow, you will get access to that trade alert channel. Solana was also a little bit of a beast during this drop. It didn't dramatically drop when Bitcoin returned to 52K on Friday, and it pretty much held its daily support at around the 126 level. We did have a candle close below it, but we've come back above it so far. If Asia does take us out, considering we have all of these wicks to the downside, you'd be targeting Solana at this vector candle right here, because that's where the wicks have taken us before, and that's between about $100 to $111 initially for Solana. But if we get some sort of temporary relief, again, you just be looking for market structure to change with Solana. Now, the reason that happened and it wasn't so dramatic comes back to the dominance this week. And it was actually the first time in the whole Bitcoin accumulation range that when Bitcoin dumped, the alts didn't dramatically bleed. And it wasn't a case of what do I do? I'm so far down. The alts did drop a little, but it wasn't super dramatic. Looking at the Bitcoin dominance on the daily here, we're basically consolidating, but we started to have this little drop through. Now, this drop happened as the Bitcoin price was dropping as well. And so the rule is when Bitcoin dominance drops and Bitcoin price drops, your alts will stay stable. So it was nice to see that we didn't have major altcoin wreckage like we usually see when Bitcoin dumps this time. Now, it wasn't a major drop. This to me is more consolidation than a change in trend. It hasn't actually changed the trend yet, but it is something that we want to start to keep an eye on, because if we do keep dropping, then it means we need to figure out where the money is going. And that doesn't mean it's automatically going into your altcoins. I'm sorry to tell you. If the Bitcoin dominance drops, but the USDT dominance rises, then we're shifting to stables, not alts.